How about some good news to start your day? The CPI, a measure of consumer inflation, came in flat month over month and down to 8.5% year over year, both below expectations. The knee-jerk reaction is a big bounce higher in futures with interest rates moving lower. Welcome to the Money Runner. It's Wednesday, August 10th. This is your Market Minute. I'm David Nelson. Inflation has been persistent on the heels of rapid growth in the U.S. coming out of the COVID pandemic. It took too long for the FOMC to recognize the obvious, and this year, markets paid the price. But good news is good news, and it's a step in the right direction as inflation has been cutting into the consumer's budget. The biggest problem ahead is just how far will the Fed have to go to finish the job? And now that's an open question. The Fed's target of 2% inflation, that's aggressive. But for the moment, markets seem to believe they can pull it off. The more likely scenario is for the Fed and market forces to bring inflation down to maybe 4%. That would take away one of the legs of the stool of the bull market. The Fed may be able to take their foot off the brake, but they're not going to be able to cut the Fed funds rate like many market participants believe. It's a debate we're going to be having for some time. Earnings season isn't over, and we get a report from Walt Disney tonight after the bell. Given some of the disappointments we've seen in streaming service firms, investors will want to hear a positive message from Disney CEO Bob Chapek. The bigger issue for streaming has been multiple compression at most media companies. Street is looking for just shy of $21 billion in revenue for the quarter and 96 cents on the bottom line, but the focus will be on Disney Plus subscribers and how many were added. I really take a different view. Just adding scale on the long term won't be enough. What is the average revenue per user, and what does profitability look like as this service continues to scale? That's it for this morning. I'll see you again tomorrow. Thanks for joining. I'm David Nelson.